All right, so in this video, we finna talk about PPI, right? So PPI just measures the average change over time and the selling prices received by domestic producers for their output. The prices included are from the first commercial transaction for many products and some services. So that's saying that the people that we buy goods from, this is measuring what they paying to get those products in order to create that output to sell to us. So this is the chart of what we had. So I'll go to the total less food and energy, right? And you can see this. You can type in PPI BLS and you can find this chart, right? So this is a month over month change, and this was the pandemic, and you can see it's just been kind of shooting up, and you had these swings back and forth. I mean, all last year people kept trying to say this was the inflection, this was the inflection. They would try to say this is the inflection. Nobody really knows. I don't think it is because you can't just get rid of it that fast. The Fed got a lot to do, right? And I've talked about raising rates and balance sheet runoff and all that stuff. So this is a cool picture I saw on the internet that basically explains it. So this is where we at right now. Tapering is beginning. They doubling the pace of tapering. They are with the market is expecting 4 rate hikes this year. First one in March. Tapering is expected to end right in March. And like I explained in my previous video, I talked about the balance sheet runoff and what we're expecting, which is 100 billion per month, according to JP Morgan, which is twice what we did back in this time frame. And I've also showed what markets did, how they reacted back here when we had this minor rundown, right? Balance sheet runoff, unwinding of the balance sheet. So people are gonna try to say buy the dip and all that stuff. And if you're a long-term investor, it's so easy to be right when you just say buy the dip. But like, I mean, I don't see any real reasons to go shopping right now because this stuff is not discounted. Like most of the stuff. When I say stuff, I'm talking about tech. So look at the NASDAQ. Like I talked about in my previous video, this bounce was weak to me. And it's clearly gonna flush it now. I called 390 as the top. Here we are, right? I talked about ARK, rejecting at 89, rejected. It's finna flush some more. Talked about DocuSign at 147, at the 147, rejected. I mean, this stuff is trash. I love Snapchat, and I think the company with the metaverse and all that stuff can do really well, but that's down 10% today. Um, People want to know if they should buy Bitcoin. I keep saying it. I don't see any reason to buy Bitcoin. When it got down to 40,000, you should have seen a monstrous bounce. It should have been no hesitation. CPI came out yesterday and it was 7% versus like what 7.2 expected. And crypto bounced, the NASDAQ bounced, right? So I don't think it just was a trade in my opinion. There was a lot of people just trading the momentum, trading news. I think this is gonna flush 40,000. I think we're gonna see sub 30. Once we get down to 28,000, 29,000, 30,000, we'll reevaluate the market and see where we at. I have no interest in touching Bitcoin or any crypto until, or definitely not no tech stocks until after FOMC January, which is the 25th and 26th. So we'll hear from Brother Jay Powell on the 26th of this month. And I believe the next one is in March. So after that, you'll have a better picture of where the Fed's head is at. Because today you had, I think a name like Brainard or something. She like right on the Brother Jay Powell now. She was talking about something to the effect of using all tools to combat inflation. You got people talking about wanting to start balance sheet runoff right now. Like they wilding out there. So this is not ideal for markets. And if you need more information on that, then definitely go to my recent videos that I uploaded. So something that I like right now a lot is CLF and Nucor, of course. So this is the Elliott Wave theory that I have for CLF, and this is also, the yellow is the Elliott Wave theory, and this is my Fibonacci extension, right? So for the Fibonacci extension, all you do is take this point, you take your impulse, which was your pump. In this case, since we bullish, it was a pump, right? So you take your pump, connect first point here, second point here, and then the final point is to the retracement, and it just draws it out for you. So I'll just show you real quick. So with this, you select fib extension, and I say take it from that point, and that's how far I pull back, and it just shows it for me. Right, so bam, there you go. That golden ratio is what you care about the most. So I got curious today. I said, let me draw the Elliott Wave theory. And I'll do another video. I know I keep saying I'll do another video sometime explaining the Elliott Wave theory. The Elliott Wave theory is 5 waves. Stocks don't just shoot straight up. They're going to bounce, right? So this is wave 1. It's pretty clear in my opinion. Wave 2, you calculate by taking the length of wave 1 and multiplying it, or what we at? Oh, wave 2 here. You take the length of wave 1 and multiply it by, I'm going to just talk about it right now. I'm going to try to breeze through it. So where we at? Elliott Wave theory. You take the length of wave 1 and multiply it by 0.382, 0.5, or 0.618, right? 0.618 is your golden ratio. So you multiply the length of wave 1 by 0.5, you get 2.82, and you subtract that 2.82 from the length of, or the top of wave 1, right? And you get 21.85. And you can see we were right around 21.85 for the bounce, right? So you can see it there. So that, in my opinion, is what piqued my curiosity to say, okay, are we forming this Elliott Wave theory? So in between waves, you have these corrective waves like an ABC, right? So you're not just going to, well, you can just shoot straight up. Once wave 2 is finished, you can just shoot straight up, but it seemed like here we need this little corrective wave. So we want to do a little bit of bouncing around before we go. So if we take, now for wave 3, we're going to take the length of wave 1 and multiply it by 1.618 or 2.618. I did 1.618 to be conservative because you don't want to just assume 2.618. You'll be crazy overextended, right? So you multiply that by the point, by 1.618, and you get up here. So the length of wave 1 times 1.618 is 9.13, and you add that 9.13 to wave 3, which we said was 21.85, or 20 to wave 2, which was 21.85, right? So in that ballpark area, it wasn't exactly 21.85. So you can see here too, right, with the Fibonacci extension, it's like dead on. So I mean, like they both using Fibonacci levels. So now for the no wave 4, you take the length of wave 1, and multiply by 0.382 or 0.5. Like I said, I typically go conservative, right? So I did 0.5 here just so I can assume we get a big pullback. So I go conservative on both ends, right? So since we bullish, I'm going to be conservative and say we see less of the more conservative pump and we see a more drastic pullback. That's what I'm always expecting, right, when I'm bullish in a bullish Elliott Wave theory, because this can be bearish too, and I'll show you a bearish case. So for wave 5, it's just the same thing. Length of wave 1 times 0.5, and it gets you back right up here. So you could potentially see a double top. And wave 5 is typically the end. That's when stuff start reversing. So wave 5, I think, could go higher. What we got here? You go 0.618. right? But like I said, I just went with the 0.5 that was right in the middle. It wasn't nothing too crazy. So we could very well see a double top here. We could explode and go to this 2.618 level, which I mean I think that's very possible too, because I don't want to be overly bullish on this stuff, but even with the break of this descending triangle, this breakout here, this green line says that we should at least be at what 27.7. So I know to be bullish on this. We bouncing right off these anchored VWAPs. So we retesting this downtrend for a second time. I don't know why it just decided to sell off the way it did. But like I said, we retesting this downtrend for a second time, and this is something that I'm pretty bullish on in the short term. We got earnings coming up on January 21st, so you can see it's retesting that downtrend again. It might want to go retest this 21.7 area. So the Elliott Wave theory gets nullified or basically neglected or negated if your waves start to like intertwine and you cross over. I forget what the exact rules was, but basically, I guess like wave three should be, wave three typically exceeds wave one. I think wave two should not retrace more than 100% of wave one. So you got some stuff here. I include the link to this where you can read more about it, but that's pretty much where we at on markets. I like CLF and NUE a lot right now, and I like Morgan Stanley for a pullback. So around this anchor VWAP. So anything under 100 for Morgan Stanley been getting bought up. And like I said yesterday, we had that bearish engulfing. It clearly was finna pull back. You're gonna have some earnings volatility. I think they were reporting like the 19th or something. You watch some previous videos, we talked more about the balance sheet runoff. This is a cool video or cool immature to see. This is when Bitcoin sold off and markets sold off in 2018. This is where we at right now. So we got a long way to go to normalize this balance sheet. And this was when the pandemic started. And so that's pretty much where market's at. And you can buy any dip you want to buy. Like I said, over a long enough time horizon, anybody is liable to be right about anything. So just have your goals set and understand what your risk tolerance is. I'm just not going to buy something if I see a strong potential that is going to decline more. I wouldn't necessarily say turn off like recurring investments or nothing like that. Just do whatever you feel is best for your portfolio and just roll with it like that. Of course, you can join our Discord at investorsanonymous.net. I've got educational courses there where I talk about, teach all of this stuff, all of these patterns, candlestick patterns, shape patterns, Elliott Wave theories, everything, literally everything, the fundamentals of stocks, everything. So definitely get a video, a like, and subscribe to the channel. And I'll see y'all for the next video.